What's good, guys? It's your boy CS back with another one. In this video, I am going to be talking about the Leverage Lounge series part 3 on intermediate training. And I think this is the one that you've been really looking forward to, which is my risk to reward support and resistance strategy, right? So I've just made a few notes of what I'm going to be talking about here, such as scalping, order flow and volume footprint, and mentality while going into a scalp and into my risk to reward strategy. First off, I want to talk about high leverage, right? Somebody asked me in the VIP chat, and also before I start, make sure you like, comment, and subscribe and all that jazz. And if you're not in the VIP chat, you're really missing out because there's a lot of alpha that goes into trade setups, people that are discussing other topics and new alpha memes, whatever they might be, like Brat and other coins, basically. So there's people like Spartan, Galley, loads of other people of alpha that have good stuff and good knowledge to share on what's going on in the trenches and what's happening just around crypto in general. Anywho, when I talk about leverage and I show my leverage receipts, right, I do this just to make it look fancy. I make it to look appealing to those who have never traded before. Yes, it is to entice people and to lure people in, but really it actually is a skill as well, because using high leverage, it doesn't matter the amount of leverage that I'm using, in all honesty. In actuality, I should just use less because the funding rates and the charges aren't as much. But you can use whatever leverage you want, but I'd personally wouldn't go above 20 if I was an intermediate trader. I wouldn't even be touching 10, to be honest. I'd be touching anywhere between 2 to 5. That would be a good leverage position to use and to make use of your margin. So I just wanted to get that out of the way, that yes, I use high leverage because I've been doing this for a very long time. And so for me, it's not as dangerous, but for everyone else, I wouldn't recommend at all. Now, let's get straight into some topics. So risk to reward strategy. What am I doing here? So if I pull up a Bitcoin chart, right, I'm looking for patterns on higher time frames, right, where I know that there's some type of so let's just start with alts. So let's start with alts. Let's start with because I know everybody in my group likes Brett. Let's start with Brett. When I'm looking at altcoins and I'm looking for entries, I'm not getting in on these time frames like 15, 1 hour and 4 hours. I'll use them to home in and stuff, but really I'm looking at a minimum on daily and then at best weekly. And I even gave these trades within a couple of weeks ago. I know I took some time off, but I actually told everybody this here was a good trade to take around here. And I even said, whenever we hit support zones, look for any wicks that come down and then take the long, right? And if we home in at this 4313 level, as you can see, it basically bounced here and then it went up the next day. And same thing if you got in, like, if I'm getting in here, right, at 4313, and I take this up and take my initials out at, if I'm using 50x leverage, my initials are out at like 44 around here, 4481, 4503, and then this is basically a 2x. I've doubled my money if I take out here. But what I'll do is I'll put my stop loss to entry. So peep this. This is how my strategy works, which is if I get in here, I take my initials out here, and then it comes back and takes me out, that's completely fine. I've lost zero money. I've lost nothing. Does that make sense? And so I'm not going to keep doing this every single day, but if I've done it once, I'm going to wait now and see, okay, is it testing? Yes, it's back testing. It's back testing. Okay, it's back testing. And then I might take another long here. Obviously, I've taken some time off, so I just forgot about getting into any new trades. But this is what I'm looking at. And actually, since I've been off, it broke. And I was like, oh shit, I missed the boat when I came back the other day. I think it was like Sunday. I was like, oh man, I'm gonna have to wait till we get around here. So I'm waiting here. Right? I'm waiting here. When I came back the other day, I saw a wick. I got in, it came up, but there wasn't a lot of movement. And then I saw a back test in the 1 hour. I'm like, am I really feeling this or not? So I just put my stop loss to entry here at 4.2, probably around here, 4.284. Because yeah, it was bouncing off the point of control zone, but actually this wick confirmed it. And then can you see how this is support and that is rejection? It's flipped it. And that's when I use the smaller time frames to my advantage. And you got to remember, like, my stop loss are very tight. So when I entered this here, my stop loss would have been here. But if I'm just not feeling the trade, or there's a gut instinct where I'm like, okay, I've made my initials here and I could just put my stop loss to entry, I've lost nothing, right? If in actuality I've made a gain. So that's the way that I look at it. And then, like, even now, I think I was talking with Yuri, right? Because Yuri was asking me about where should I enter and stuff like that. And I basically said, look, if we scroll back and look at these weekly support zones for Brett has always kissed these types of regions. So around this mark at 4.313. And then the other mark is here at 3.590. Now, granted, actually, this one is actually a bit higher if I zoom in. It's at 3.575. So I should have just moved that up to maybe here, 3.575. And then if I go across now, I know I'm changing the goalpost a bit, but actually that's a perfect hit. So actually there was something wrong with my line by like a few points. But I even told you, I was like, I missed that entry. No bother. That's fine. I'll just wait and we'll see if Brett comes down. If it does, great. If it doesn't, that's fine. I'll look for an entry later on. There's no rush, because what could happen is we could come back here and we could get rejected. So there is no rush when you're dealing with higher time frames. And this is my strategy on and off the field. If I go to SPX, right, look how beautiful this setup is. So many wicks off 6-1, right? And so many wicks off or hits on 5.238. And then in between, around this 5.774 region. So let's start with here, the 6.095 region, right? Look how many times it's bounced off here, the wicks, and then it's gone up. And it's stayed above. The candle has stayed above. The hollow bit of the candle has stayed above. Notice how it stayed above. See when I got in here and I rode it up, and then it's come back down, no problem. It's taking me back to entry, but I've already taken a 3 to 4x out of it. And same here right now. We've bounced here. I've missed that entry, unfortunately. I would have loved to have got that entry. However, if I looked on the daily, the next day it came back and kissed the 5.771. I was actually waiting for it to come down here to hit this 5.228 region. It didn't. I got in here at 5.775, and now I'm just waiting. Initials are out around here, 6.1. It went up here, stop loss to entry at 5.771. And this is the same positioning that I do each and every time. So my risk to reward strategy each and every time means I have very minimal losses because I'm getting in. And the thing is, I'm not trading all the damn time. Like, I'm not trading all the damn time when I'm trying to get perfectionist entries. And so what you can do is you can either take your profits or you can let it ride if it wants to ride. But more than often, it will come back down. And that's the only issue with the risk to reward strategy, which is very risk averse. Now, when I'm scalping is basically getting in and out very quickly on like a minute candle or a 5 minute and a 10 minute, 15 minute candle. I rarely use scalping anymore because it's just not my strategy's benefit. But when I'm looking for stuff, I'm still looking at support and resistance levels. So like even here, I could scalp this and I could just leave it in. So scalping very similarly can work, where you can leave it actually into an intraday trade or a swing trade or even a longer term trade. But my general thesis on what I like to do is have 2 to 3 accounts where I am doing these, higher time frame risk to reward support and resistance strategy zones. And then I'll have like one account where I just scalp. And trust me, if you've got separate accounts, you're not going to fixate on over trading, because what you'll do is you'll have one account. Let's say you've only got $1,000, right? You've got $500 where you want to do a long-term investment, risk to reward. You put another $250 in another risk to reward account, and then you put another $250 in scalping. Your scalping is your day-to-day trading. If you've got time to day-to-day trade, you've got to have separate accounts. You must do this. Now, the bit you've all been waiting for. Apart from support and resistance zones, how do I know what's coming my way or what's coming into the stratosphere? So let's take Brett. Can you see this column to the right under funding countdown? This is the order flow. And what you'll see how much people have got orders at a specific price. So currently at 3829, there's 9.29 billion. Obviously, it fluctuates very quickly because it's getting up. And then on the red side, which is the short, so the red numbers are the limits. So think of this as an auction sale, right? This is an auction sale. So you've got an auction going on. You've got bidders in green and sellers in red, right? And they're basically saying, I want to get out at this price once it hits this order. And then the bidders are saying, I want to buy Brett at this price when it hits this price, right? So what you'll do is you home in and you can go to like 301 and you can see what the order flow is looking like. So if we look at 3770, there's like 20 to 30 billion that's going on. Now, if we home in a bit more, we can see that there's 200 billion at 0.03600. So there's a heavy, big demand going on with Brett at these levels. Even at 3700, there's a lot of demand. 200 billion worth of Brett orders are ready to get swallowed up. On the contrary, sellers are saying, I'm willing to sell Brett or short Brett at 3900, at 134 or 148 or 172 or 167, 135. See how it fluctuates? Those orders are getting filled each and every time. So it's a battle between sellers and buyers. And so I look at this to determine, where shall I get in? Why is Fartcoin not coming up here? Fartcoin's a really good one, which I like looking at. I'll look at PopCat then. So if we look at PopCat has 27 billion worth of orders at 2,500, right? But on the contrary, there's a lot of shorts and sellers at 2,800 and 2,900. So these are people putting in. So if we click here, limit, and we put that in, and then, whatever we want to do, we just like short, we could put an order. We'd be adding to that order. So you're basically creating a brick wall, right? And this is why I never act on impulse or on spontaneous reaction when I look at a chart and say, oh my God, I must get in now. No, I'll do all that I can to look at the support and resistance zones, my trend lines. I don't look at Fibonacci's, but other indicators. Whatever works for you, right? I've got the wave. You guys know what I've got on. So I've got like RSI, which is just very generic. I've got the wave patterns, which is probably my favorite. And then obviously open interest, which is a massive one as well for me, which I absolutely love, right? So I'll look at all these indicators and I'll be like, is this good enough to push the price up? And so 9 times out of 10, this works Because so much, look at this, 2600 has 26 billion, 2500 has 24 billion, 2400 has 25 billion. Only 28 and 29 and 300 or 3000 have the corresponding amount. But when you think about it, there's a buy wall. So all these people that are selling, and look at the sell-off that's happened. Popcat's gone from 2 billion down to 200 million, right? It's minus 10x. A lot of people want to buy rather than sell. And if we look at the depth, look at 3100 and look at the gap between 3100 and 3400 and 3900. There's literally nobody there. There's nobody there. See what I'm talking about? Okay, so that's how I use this to my advantage. So if we were looking at Brett, if we go back to the working example that we had on Brett, where is Brett now? Down here. Right? If we go to the working example of Brett, we knew there was massive demand down here that, well, it actually, Yuri, I'm telling you now, it did tag. I just didn't draw it correctly. So I did get that one right, even though I never entered correctly. We've seen that there's massive demand here. We've seen that there's massive demand here around the 3738 region. So there's wicks down here. Can Brett hold it? Well, there's 100, 200 billion, and then another 150, 200 billion at free. From 3600 to 3700, there's loads of orders going in. All you need to do is just watch it a few times. Like if you keep watching it, you'll see what will happen. Now, one disclaimer, which I don't want you guys to get too scared about, is when manipulation attacks happen. When people market order, like the market makers and those that are in a cabal and stuff like that, I'm not even talking about cabal calls. I'm talking about like actual institutions or the big boy players, the institutional money, the global financial banks that are hidden in the background. When they market order, you can't see that. That's the only problem. However, more times than not, they won't market order. They'll only market order when there's mass manipulation, like what has just happened recently. That is manipulation to the fullest extent, right? But when you see things like this, like limit orders, it gives you a good understanding that actually there's a lot of depth, there's a lot of demand for this particular coin. And that should get you comfortable as to buying. So I've talked about order flow, volume footprint. It doesn't really work as well with this, and I don't think I've actually tried doing the volume footprint with this, but they've changed the style of trading view, so it's all the buttons have changed for me, so that's why I'm a bit slow in accumulating the information of where I need to go to. So look at the delta yesterday. It's actually positive for Brett. So you can use volume footprints as well. To the degree of accuracy, I don't know how accurate it is. I don't really like that. I prefer candlesticks, but obviously they do have its merit. Volume footprints are great for Bitcoin, in my opinion. And yeah, the mentality going into this strategy is that the risk to reward strategy is basic like this. Look for higher time frame zones. Sometimes the higher time frame zones will get wasted, like on this candle, for instance. This just skipped past a whole weekly time frame. But generally, you can see where the big zones are. So this is a big zone between, 3.5 and 4.3, right? And then you've got another zone where it's like in here, which is more like 6.8 to 7.906. So if you can catch them, like can you see all this in here got caught? Obviously, this is back in October. But if you caught this, obviously, you would have been laughing. And then on the way down, this is the thing, which actually in this case, it broke through with Brett. But when we look at it on a daily, right, And the same thing here, which is you still got a bit of a wick up the next day, even if you got the kiss and you could have got taken out. And, you know, most of the time this strategy does work. I'd say 8 out of 10 times I'm in a winning trade, right? I'm always in a winning trade. The other 1 to 2 trades, I either get stopped out at entry or I just get stopped out. But you got to remember my stop losses. So if let's say I got in at 6895 and I got the little wick here, haha, I'm happy. And let's say I didn't take any initials out, and let's say I just let it ride up. My stop loss is somewhere down here. It's really tight. I don't really like having too big of a stop loss. If I was doing a long-term trade like here and I got in and I was like, you know what, I don't want to use CS's high leverage trading to make myself look fancy. I just want a normal trade where I can just hold it and not worry too much. I just get in on like 3-4x here. Liquidation level, like, I don't know, somewhere all the way down here, like 0.07. And I just ride it and just chill. I just wouldn't even think about it. That's my personal opinion. You'd make more money on leverage on a 3x rather than spot buying Brett. That's just my opinion. You'd have liquidation levels so low that you don't even need to think about it. But yeah, that's a whistle-stop tour of this intermediate session of risk to reward, and how basically I leverage trade the majority of my trade. So the biggest thing, and again, I've talked about it on Psychology of a Trader, so go back and watch that video. And you know what? Go watch it before. Go watch that video in conjunction with this video. Which is called Psychology of a Trader, because it'll teach you about patience. I'm talking about this as if it's so simple. It is so simple, but there's one thing that people negate, that they lack. And that omission is patience. If you cannot have patience, if you have a failure to wait, you will not get anywhere in life, just in general. Like, what's that famous quote? If you fail to plan, you plan to fail, right? You fail to plan, you plan to fail. You really need to plan in advance where you're going to take a long and when you're going to take a short. And also, concluding thoughts is, a lot of you guys don't have freedom like myself, which is time to trade on the charts. And I get that. And that's why I tell you, don't follow the calls and don't follow these idiots, because they've been screaming buy, 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 buy. Literally, I came back the other day and I said higher, buy. And I was buying alts, and you've seen what had happened, right? And I'm not saying that to toot my own horn and stuff like that. But the fact of the reality is, I wouldn't suggest something to you guys unless I was doing it myself. And you got to remember, even on a couple of the trades that I did take with Bitcoin, getting smoked. Remember, I caught the bounces, and all the altcoins that I'm in have just been going up. Remember, let's not get it twisted. Like Fartcoin was I can't remember. All these other coins, even MLG and Popcat, right? They're all in green today as well. So it's not as if I've been spouting nonsense. It's that I'm spouting where to get in, and also what's happening, which I'll come on to in a separate day, on a separate video, which is the BTCD, the dominance, right? Okay, I think I've talked enough about all of that, and that should help you on your way. If you guys have any questions, then do let me know on the YouTube comments. Remember to like, comment, and subscribe. But also, the reason I'm asking this is because for the advanced video, I'll be giving you the final, I guess, indicator to corroborate with this strategy, the order flow, the volume footprint, you support resistance zones, whatever you use, Bollinger Bands, whatever it is that you want to use, MACD. There's so many different things that people use. Whatever you guys want to use, but use it to your benefit, and don't overuse stuff. Don't use too many different things, because one thing will tell you a different thing from the other. The MACD might conflict with the RSI, or the stochastic might conflict with my wave patterns. So there's so many different indicators. Be simplistic. Be as simple as you can. Use support resistance. Use chart patterns because they work very, very well. They work, in my opinion. Fibonacci is bullshit. In my general opinion, I hate Fibonacci levels because I see all these people use 0.6786 and then the golden pocket ratio and then 0.5. Okay, dude, but they keep going past there. So like, it never touches there. It goes past there, then it comes back there. But you're like, yeah, it hit the golden pocket, it hit the 0.382. I'm like, okay, dude. Great. Me personally, I've never had any good luck with Fibonacci levels. And I think that's one of the reasons why I keep it out of my day-to-day trading. I love chart patterns. Chart patterns on Bitcoin and in crypto work better than on Forex. On Forex, Fibonacci works a bit better. But on crypto coins, I don't think it works as well because you've got the swing high, you've got the swing low, then you've got the all-time high Fibonacci level to where's your bottom then? Oh, it's the recent bottom of like 5 months ago. Okay, but then another guy's using the bottom from like 2 years ago on a monthly chart, and that looks more cleaner than what you're using, right? So there's a lot of conflicting ideas. You need to have a risk management strategy that works for you. And then use the order flow, the volume footprint. And remember, all the other exchanges, Binance, MEXC, etc., they have the exact same order flow as this shows here, right? Okay, guys, that's it from me. Catch you in the next one.